So today is crazy. I mean, it's not that crazy, but I'm doing this video out earlier because I have to go on the road. So I actually finished my trade today. It was like a 1.8 to 1 risk reward trade. And then we also have the SIV bank thing going on. That's the Silicon Valley Bank thing happening, and also something that's in the background, which is the Silvergate Bank. That's like the middle person between the crypto and actual the US banking system, or the financial system. So I'm going to talk about both of these things. So let me show you the trade that we had that I already completed today. So since I'm going on the road, I might not be able to monitor the trade. I'll be driving a lot. So I'm deciding, let me get out this video so I can edit it while I'm like in the middle of traveling, and then I can get this out to you before the day is even over, right? So let's get into it, right? So I had two trades today, right? One on the QQQ to the downside, and let me see where I entered. I believe it was somewhere around here. So the first trade was, what's this? You -5 from this 1034. So I actually entered to the downside on this candle, and this is the 1 hour. That's what's messing me up. My bad. So at 1034, which was on this candle, I entered to the downside. Interesting. I closed it out within 2 minutes because I could see the MACD kind of getting very weak. With the MACD getting weak, it was like, yeah, this trade is not going to hold up. It's a good thing I kind of manually closed the trade, because I just didn't like how it was moving, and also seeing no strength from the MACD. It was like no strength and weakness from the MACD. That's showing me that's like more of a bullish momentum. So I'll put it up right here, and you'll be able to see it exactly where I entered. So the entry was 290.87. Let me change this hotkey. I think that's really what's messing me up here. It's the entry was 290.87, right? Take profit level if I'm generally going for a 2 to 1. So I generally go for a 2 to 1, and I usually take that, which is it would have been a 292.87 thereabout, and then my 290.87, and then, oh no, 292.87, right? No, for a sell, 288.87. Okay, and then we're actually closed it. It was 29156. So when I entered this, the thing about this, I was definitely monitoring the trade. So it was a 2 to 1 risk reward, but I just didn't like how it was reversing, and you just didn't have that strength in the MACD. I was looking for more of a bearish MACD that I could tell you that it would have continued. So I tried to get out without hitting my full $100 risk drawdown. Like, I just did not like that at all. Right. So the second trade, I flipped it, and I think it was around the same time on the same candle. Yep. It was at that same candle on the 1030 candle to the upside. So I saw this weakness, and you have previous weakness here. So this can kind of tell you that we're going to the upside. Just a weakness here, weakness, 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 smaller candles as well, smaller candles, and then we get the green push. Even though the green push wasn't that strong, you would still be able to take it out, at least on this push, before it started to retrace, because you can see it started to pull back when the MACD started to have the weakness here. So I'll show you where I entered and where I exited. I could have made a little more on the trade. However, I just wanted to get out. I mean, the trade was up around 200 at some point, so I could have gotten out a little later, but that's what happens. You're not going to get it perfect all the time, but if you're monitoring the trade, you can get out somewhere good and not be mad about it. I'm not mad about it at all. I'm actually good with what took place today. So the entry price was here, and where was my price for, as far as stop loss was, my price for stop loss was around here, right? So let me show you. Ah, so this is where I had the stop loss originally. So it was 1.24 to 1 risk reward. Was this where my stop loss was? So I entered here. Yes, this is exactly where my stop loss was. So I entered here to the upside. My stop loss was off of this candle. So I was saying if the market kind of pushed down back to this level, it, I wouldn't want to be in the trade any anymore. Like for it to pull down anymore below here, I would not want to even be in the trade. Let me see. Let me see. So this is 29021. Wow. It's almost like it came. No, I entered on this one. It's almost like the second one just about came to it. Like it came right there, touched it, and didn't break through it. That's funny. That's funny. It's like it came right down through it. But that's where I had my stop loss. I'm not sure why it didn't get taken out, but I'm grateful, I guess. But it's still a little bit too close for my comfort. Like I would want a little more space. But it seemed like it came right into the stop loss and rebounded. Very tight stop loss. But I set the stop loss based off this body point here. And then the take profit is when I could see the market coming up here. I think I closed it on this candle. So yeah, the 11:30 candle, which is this candle. So I saw the candlestick kind of forming a reversal pattern here. And then the next candle, I could see weakness, right? So I'm seeing kind of you're not getting those strong bullish on the MACD. So at that point, I'm like, yep, it's not really worth it. You have a long wick pushing down. I was content with the amount, so that's a thing where you just can't be greedy. If you're not greedy, you're able to take some profits out of the market. And I want the strategy to be proven out to the point where I can see it, take some trades, get in profit, move my stop loss into profit, and exit nice, clean. Not a lot of fights. I mean, this trade began to go against me quickly, so this wasn't able for me to enter in profit. I wanted to close, cut the loser a bit faster, but that didn't happen, and that's how it goes, right? So those are basically the two trades for today, right? We're gonna talk about Silicon Valley Bank for a little bit as well because it's quite important and it's affecting the entire market. So we have Silicon Valley Bank fails, closed by California regulators. So this bank actually closed. The Silicon Valley Bank dropped another 60% and is halted Friday. So it's completely halted, right? SIVB. So it didn't even trade today. They didn't even allow it to trade today because people probably would have pushed it down to the ground, right? So this is Silicon Valley Bank. This was when Wednesday, and this is Thursday, right? So Thursday you have a big sell off, 60%, and the reason behind this is about Silicon Valley Bank does not have the liquidity or something. Let me see if I can find the exact thing that's happening. So it's like they don't have the money, and people are trying to pull out the money out of the bank. So let's see. I'm trying to find a nice article for everyone. But basically, the FDIC reported this today that the bank failed. So FDIC creates a deposit insurance national bank of Santa Clara to protect insured depositors. So everybody that has $250,000, the FDIC is actually or should actually step in and make those people whole. So all insured depositors will have full access to their insured deposits no later than Monday morning, March 13th. So the bank is currently closed. Nobody is able to pull the money out of the bank, which is very suspicious. So nobody is able to actually go in and get their money out of the bank. So this is very bad. So what they're attributing the bank's liquidity crisis to is that the bank had purchased a lot of bonds as the Fed continues to raise interest rates, like the bonds value goes down as they yield more, the value of the bonds themselves, like the price value actually goes down. Those lead to a lot of losses on the balance sheet. And also, if the banks are not offering you a high interest rate, right? If the bank's not offering a high interest rate and you can purchase a Fed bond, right, that's guaranteeing you 4%, 5%, why would you put money into a bank? If the bank doesn't have that money flowing through, it cannot do the business operations because basically the bank needs to take money here, pay it to somebody else, take money there. So it's a big cycle. But when the water kind of stops flowing, that's when you have a like big trouble. And let me see if I can find an article that spoke about it yesterday. So Silicon Valley Bank, and they're also in talks to sell itself. To sell itself, that's very bad. Let me see. Silicon Valley Bank, March 9. I'm looking for March 9 article. So this is from Reuters. So Silicon Valley Bank scrambles to reassure clients after 60% stock wipeout, right? Silicon Valley Bank scrambled on Thursday to reassure its venture capital clients their money was safe after a capital raise led to its stock collapsing 60% contributed to wiping out of over 80 billion in value from bank shares. 80 billion. So can you imagine they need liquidity, right? They launched a 1.75 billion share sale on Wednesday to shore up its balance sheet. So they're trying to get liquidity from the public market, right? And then people sell out shares, resulting in a 80 billion. So you're trying to raise 1.75 billion dollars and you lose 80 billion dollars. That's not good at all. Not good at all. And you're seeing where they purchased. When they purchased the bonds, the yields were at 1.79, right? So right now the yield is 3.9. So you know the price of them have dropped a ton, right? And they had $21 billion loss bond portfolio. So they purchased the bonds cheap. The bonds prices kept dumping. So this was essentially a bad trade for the guys. And they're having deposit drops, right? Let's move on to the next thing now. So we have Silvergate Bank, which is basically the bank that's in between big crypto like Coinbase, and you have like say JP Morgan, Goldman Sachs, Charles Schwab. So you have that bank as the intermediary. So you have JP Morgan. So basically you have Coinbase. If they need to get like big clients, the client can go through Silvergate Bank, right? Purchase coins on Coinbase. If Coinbase needs to sell, Coinbase should sell into Silvergate Bank. Silvergate Bank should hook them up to whatever big bank or financial industry on the other side, which is either the Fed or JP Morgan, Goldman Sachs, etc. Right? So Silvergate Capital announced it will wind down operations. And I'll also put up a screenshot from a friend here where he talks about blockchain not allowing him to withdraw any funds or anything like that because of what's happening with Silvergate. So this is bigger than what we're seeing right now. It's similar to what happened with Celsius, but this has happened with more reputable companies, and also Coinbase can be exposed to this risk as well if that bank goes down, right? Because as you can see, the slight move lower began late Wednesday after a few hours after Silvergate Capital announced it will wind down operations and liquidate its crypto-friendly bank. Oh, no good. The declines deepened by Thursday afternoon, however, after shares of SVB Bank. So it's need to recapitalize. Whoa. Although SVB has said it has minimal exposure to crypto, its need to recapitalize on the heels of Silvergate events has linked two events in people's mind. Interesting, interesting. Very interesting. And let's check out Silvergate Bank. So the ticker for that is SI. So let's clear up this now. What are we seeing? Whoa. Silvergate Bank is at $4. Where are we coming from? I'm pretty sure we're coming from like 100. Am I tweaking? I'm not tweaking. Damn. November 2021, this bank was at 219. You're telling me at this present moment in time, this bank is sitting at $2. I don't know, dude. If this bank stays alive, it might be a buy. I don't know. I don't know. Unless they're doing some shifty things, but this is crazy. But basically, I hope you enjoyed this video. I'll be editing it on my way, and I'll talk to you probably in tomorrow's video. All right. Bye bye. Ooh.